Welcome to The Explainer. I am so thrilled you're joining me today because, well, we're tackling a topic that literally forms the absolute bedrock of modern business, governance, and trust. We are talking about auditing. Now, I know, the word audit might instantly make you think of, giant, boring stacks of paperwork in a dusty back office. But today, we're going to completely demystify that. Actually, did you know the concept of auditing dates all the way back to ancient Egypt and Rome? It's true. So today, we're going to break down the comprehensive modern framework of auditing and really examine its underlying architecture. By the end of this, you're going to see that audits aren't just this one big monolithic thing. They're a highly specialized toolkit designed to protect, optimize, and investigate literally every corner of an organization. Okay, let's quickly look at our roadmap for today. We're covering 4 main areas. 1. External and legal audits. 2. Inside the organization. 3. Compliance and public trust. And 4. Forensic, the fraud detectives. Let's jump right into Section 1, External and Legal Audits. This is essentially where independent watchdogs review an organization to provide assurances to external stakeholders and, of course, to satisfy the law.
Before we look at specific external audits, though, we really need to contrast 2 main pillars, external versus internal. This distinction is absolutely vital for everything else we're going to discuss today. External audits are fiercely independent and purely financially focused. Their whole job is to look at the numbers and report to the outside world. On the flip side, internal audits are management-oriented and control-focused. They're much broader, looking at how the company operates from the inside out, specifically to help management improve.
Now, this beautifully illustrates the foundation of a classic external audit. The entire purpose here is just to provide assurance on financial statements. The scope? It includes financial statements, accounting records, and vital disclosures, basically ensuring that nothing material is hiding in the fine print. And it's performed by a completely independent external auditor. Why is that so important? Well, because the audience for this report isn't the company's CEO. The reporting goes directly to the shareholders, the members, and the regulators. They absolutely need an unbiased outside opinion that the financial picture the company is painting is actually true and fair. Moving right along to statutory audits. So the crucial point here is that these are strictly required by law. The word statutory literally means relating to statutes or laws, right? The purpose is absolute legal compliance and public assurance. Unlike other audits where a company might just decide what they want looked at, the scope here is entirely prescribed by the statute itself. It has to be performed by a legally qualified auditor, and again, the reporting goes straight to the members or regulators. The government is essentially stepping in and saying, hey, if you want to operate as this type of entity, you must undergo this specific check. To ground this a bit, a perfect example, straight from our source material, is a standard company audit mandated under the Companies Act. If you incorporate a business, the law explicitly dictates that you must be audited to ensure you're playing by the foundational rules of corporate governance. There's no opting out here. It is a hard legal obligation. Now, what's really interesting about tax audits is the heavy, incredibly granular scope. A tax audit exists solely to verify compliance with tax laws and ensure completely accurate tax reporting. Just look at that scope. It is intensely focused on income, detailed deductions, specific disallowances, complex TDS and TCS withholdings, GST reconciliations, and the overarching books. Depending on where you are in the world, this is executed by a specialized tax auditor or chartered accountant, and the ultimate reporting authority? It's the tax department itself. It's essentially a magnifying glass specifically aimed at ensuring the government gets its correct slice of the pie. All right, let's shift our perspective a bit. Section 2, Inside the Organization. We're stepping away from the law and the public for a moment to look at how an organization optimizes itself from within. Going back to that baseline we established earlier, the internal audit is this massive independent appraisal function. Look at the purpose. It's not just about getting the math right anymore. It's designed to improve risk management, internal controls, and overall governance. Because it's so much broader than a financial audit, the scope expands massively to include daily operations, efficiency metrics, and even identifying fraud risk before it happens. This is performed by an internal team or sometimes an outsourced firm, and here's the massive difference. They report directly to the management or the audit committee. You can think of them as the organization's very own internal immune system. Building on those internal checks, we have the operational audit. I absolutely love this one because it's all about performance. It steps entirely away from just looking at accounting ledgers and asks 3 vital questions. Is this process economical? Is it efficient? And is it effective? It's a deep, deep dive into the actual mechanics of how a business gets things done on a day-to-day basis. For instance, imagine a company auditing its own procurement cycle. An operational audit would go in specifically to identify excess costs. Asking, are we paying way too much for raw materials? It looks for delays in the supply chain. It critically examines vendor concentration, like, are we too reliant on just one single supplier creating a massive operational risk? And finally, it looks for any systemic leakages where money or resources are just draining away unnecessarily. It is pure business optimization.
Which actually brings us to a really powerful question asked in our source material. A question that acts as the entire foundation for our next audit type: is management actually running the business effectively?
A management audit answers that exact question by evaluating the leadership itself. This is incredibly high-level stuff. It puts management decisions, the overall organizational structure, strategic planning, and the sheer quality of leadership directly under the microscope. It's not just auditing the employees or the daily processes anymore, it's auditing the bosses. It assesses if the vision and the execution at the very top of the corporate ladder are actually driving the overall performance of the entity.
Moving into Section 3, Compliance and Public Trust. Let's see how all this builds into maintaining rules and safeguarding public trust across both the private and public sectors. First up here is the compliance audit. So the crucial point of a compliance audit is rule following in the strictest possible sense. It thoroughly checks whether the entity is adhering to a whole web of obligations, applicable laws, industry regulations, binding external contracts, and yes, even the company's own internal policies. It's a comprehensive health check, really, to ensure that the organization isn't accidentally, or intentionally for that matter, stepping out of bounds and exposing itself to massive liability. A great practical application highlighted in the source is checking whether a mutual fund's asset management company, an AMC, is actually following CBI's strict investment restrictions. Think about it. When millions of regular people invest their hard-earned savings into a mutual fund, regulators put strict limits on what that fund can do with the money to protect it. A compliance audit ensures that the AMC isn't playing fast and loose with those crucial restrictions. Now, scaling that up to the public level, we have the government audit. This takes the core concept of auditing and applies it straight to the taxpayer's dollar. A government audit strictly examines how public funds are being utilized across government departments, large public sector entities, specific financial grants, social schemes, and various statutory bodies. When you're dealing with public money, the level of scrutiny needs to be exceptionally high.
And what's truly fascinating here are the 6 specific criteria used to examine these public funds. It doesn't just ask, hey, where did the money go? It looks at regularity. Was the spending properly authorized? It looks at propriety, which is brilliant, by the way, because it asks if the spending was ethically appropriate and in the public's best interest, not just whether it was technically legal. Then it evaluates economy, efficiency, and effectiveness to ensure taxpayers are getting real value for money. And finally, strict compliance with the allocated budget and the overarching law. It's incredibly comprehensive.
Finally, we reach our fourth lens, Section 4, Forensic, the fraud detectives. This is the climax of the auditing architecture. This is the heavy-duty toolkit reserved for when things go very, very wrong.
A forensic audit is entirely investigative. I mean, it is quite literally the financial equivalent of a crime scene investigation. You don't just order a forensic audit for a routine yearly checkup. It is triggered by suspicion of major wrongdoing. We're talking about severe issues like suspected fraud, misappropriation, which is essentially using company assets for personal gain, corporate bribery, outright embezzlement, money laundering, or malicious financial manipulation. Crucially, the source material notes this is an evidence-oriented audit. It's not just about finding a little accounting error, it's about building a bulletproof case. To build that case, the forensic auditor has to answer 5 sequential questions. First, the who, pinpointing the exact individuals involved. Second, the how, deconstructing the mechanics of the crime or the manipulation. Third, quantifying the exact financial amount involved. Fourth, and perhaps most importantly, gathering every single piece of available evidence. And the 5th step? That's the ultimate test. Can this gathered evidence actually support legal proceedings in a court of law? If it can't hold up in court, the forensic audit hasn't finished its job. So, we've journeyed from external financial reviews and statutory legal requirements through deep internal operational and management appraisals into the realms of public compliance and all the way to the rigorous evidence gathering of a forensic investigation. It is a brilliant, multifaceted architecture designed to catch every conceivable inefficiency or deception. But, it leaves us with this final, really provocative thought. Even with these 9 robust architectural layers of auditing meticulously laid out, is any organization ever truly 100% immune to operational leakage or fraud?
Or is this architecture just an ongoing, constantly evolving battle against human nature itself? Thank you so much for joining me on this explainer today, focused learners. Keep asking questions, keep studying the structures around you, and I will see you next time as we continue to break down the complex frameworks that shape our world.